Hi there, my name is Michael Scott Forehand. Welcome to Financial Focus with Scott Forehand. Today's podcast is titled Beyond Wall Street, Crypto, Infinite Banking, and Smarter Planning for Business Owners. Welcome and thank you for joining us. Today, in general, we explore real-world financial strategies used by real people, not just theories pulled from a textbook or headlines driven by hype. One of the biggest challenges in financial planning today isn't a lack of options. It's an overload of options. Stocks, bonds, real estate, crypto, insurance products, retirement plans, alternative strategies, and the list goes on and it keeps growing. For many people, especially high-income professionals and business owners, the question isn't whether to invest, it's how to build a system that actually works together. Because the truth is, complexity without coordination creates risk, and success without structure creates stress. So, today's conversation is about what it looks like when someone intentionally builds a financial ecosystem, one that balances growth with protection, innovation with discipline, and opportunity with control. Our guest today is Dr. Dan Martin, a physician and practice owner in Western North Carolina. He's someone who understands the decision-making under pressure, both in medicine and in money. And what makes his story particularly interesting is not any single strategy he uses, but how he integrates multiple strategies into a cohesive plan. Dr. Martin is an avid investor in the crypto space, an area that attracts both excitement and skepticism, but his approach isn't speculative or impulsive. It's intentional, it's researched, and it's framed with a broader diversification strategy. He also personally uses infinite banking concepts, not just for himself, but as a 401k replacement strategy for his employees, which speaks volumes about how he thinks about long-term value, retention, and control within his practice. In addition, he uses annuities as part of his long-term planning and diversification strategies, creating predictable, contractual income along with more growth-oriented assets. And for his children, he uses indexed universal life policies as a tool for college planning, building flexibility where most traditional plans lock families in. That combination of crypto, infinite banking, annuities, and IULs might sound unconventional to some, but when you zoom out, a pattern emerges. Each strategy serves a purpose. Each one solves a different problem. And together, they form a system designed to reduce reliance on any single market, institution, or outcome. This episode is not about telling you to copy someone else's plan. It's about understanding how a high-level professional thinks through the risk, thinks through the liquidity, establishes control, and creates the legacy. And ultimately how those principles can be applied in your life, regardless of income or profession. So whether you're a business owner, a medical professional, or simply someone trying to make smarter financial decisions in an increasingly complex world, today's conversation will challenge you to think differently, not just about where your money goes, but how it works for you. With that, I'm excited to welcome our guest, my friend, physician, business owner, intentional investor, Dr. Dan Martin. Dr. Martin, how you doing?
I'm good, Scott. Thanks for having me on, and I appreciate the intro and excited to talk today.
Well, thank you for allowing me to volunteer you to be here. I appreciate you acquiescing to my request, so thank you.
Of course,
All right, so before we get into the strategy, let's talk for a second. Tell us a bit about your medical practice, how being a practice owner has shaped the way you think about money. What are things that have helped you or been an impediment to you to get to where you want to be?
Yeah, I'm very fortunate. My father is a retired orthodontist, and I have a lot of other medical doctors, and I'm a chiropractor. And my dad, one thing I just remember early on, he always told me, he said, do whatever you want. I'll support you no matter what you want to do, but I'd recommend you be your own boss. And he kind of told me, the reasons why, and that you have options and the control. And I appreciate him instilling that in me and kind of, being able to see that at a younger age, and then, him helping me, get to that spot. But I think definitely being having a practice, being a business owner, um, you have to take, kind of look at the whole picture of opening a practice, taking out loans, equipment, really having a game plan, because obviously you're borrowing money and you got to
Yep.
spend that money, and then you got to
Yep.
make sure you have return on it. So it definitely helped me. I opened up right out of school. I have my own practice called Radius Chiropractic in Asheville. I opened up right out of school, and I networked for about 6 months. We put 400 people on our books before we opened the doors. So I was
Nice.
very intuitive, and I had a great mentorship program I was a part of that in school, that I was able to practice the business side before I got into it. So early on, it was kind of grind before I had kids. Loved it. My wife was our office manager. We have two little girls. She's now at home with them, and I run the show with one of our staff who we upgraded to our office manager. But when she stepped out, we were doing really well. I just worked hard to see as many people as I can. The money was good. But then we had some things come up, in our personal life, a huge dynamic. It was kind of our front desk, office manager, finances. I was the engine. So, what I thought, we had the money was good. I really also didn't have a handle on how to manage it. As many of the positives, but actually, where it's coming, where it's going, taxes, profit loss statements, profitability. And we actually, after she stepped out and we had our first child, we had some dips, and it really kind of woke me up to really take a better handle, and having kids in the future. So it's definitely, being a business owner and owning a practice has been had ups and downs, but thankfully, and I think too, you got to have those down periods to grow, and to be challenged and to change your mindset. So
Right.
um, that's definitely helped me where I am today, for sure.
I
And
think
yeah.
what you just said actually kind of answers this next question. So, physicians are often high earners, which is awesome. Okay. But that doesn't always translate to financial clarity. So, at some point, you had an epiphany and you realized that you needed a more intentional approach to planning not only the business and the resources that you're going to use, but how you're going to deploy them and all that stuff. So, when
Right.
was that? When did that, oh, that's what I need, or when did that happen for you?
When I really kind of realized that I was letting people, our financial planners, who were great, your traditional financial planners, and
Sure.
our CPA, just kind of tell me what to do. And I just didn't question anything, because that I didn't like money or finances or the idea of managing it. And when we kind of got into us in the gray area, I realized, I really need to take ownership over this. And then that actually led me into, I discovered Nelson Nash and infinite banking through a
Love it.
friend, and it absolutely blew my mind. Actually, researching and understanding money and really what it is, especially banking, and the central banks, and just that whole. It was just mind blowing to me. So
Yep.
that completely made me want to create my own ecosystem where I could keep as much of it. And I figured out that obviously, whole life dividend policies was the vehicle to have the liquidity to give me the control that I really wanted to. So it really was night and day for me.
Right. I love it. And you and I, we were having a conversation before we started this recording, and I was saying that I really like not just working with you, but hanging out with you, because you and I can geek out on this stuff, and it's really cool for me to have somebody that gets what I talk about, not just a piece of it, but you kind of get all of it, which is really
Yeah.
really cool.
Well,
Okay,
it's fun. It's a lot of fun.
it is right. So now let's switch gears. So there's a lot of talk, a lot of hype, a lot of buzz about crypto. Okay, and I know that and I've got a couple of clients that are avid crypto investors and crypto specialists, and I I'm I don't use it traditionally as part of my practice, but I know you do. So what originally drew you to the crypto arena, and what convinced you that it deserved a place in your portfolio?
That's a great question. I'll try to keep that as brief as I can because it's definitely a topic I like to dive into. But kind of same thing. Blessed with God's put really great people around me,
Right.
and I had a good friend. He's probably 10 years older than me, more seasoned with life and what he did, and he had mentioned to me a specific digital asset called XRP, and he had mentioned to me a couple years, and I never really kind of like certain things, like it just didn't sink in. I didn't really dive in. And early on, like maybe in 2020, I bought some Bitcoin, some Ethereum, some other assets. I would just pick them based on their logos, threw a couple of $1,000s at it, didn't do anything with it. But then I just started to actually research, what they were.
Right.
And that's the thing. And I feel like digital assets and crypto, I think most people, when you hear the word crypto, it's like crypto. It just sounds like this weird thing that's scary. You don't understand what it is. I didn't understand what it was.
Right.
But if you can really kind of open up the hood and look at the technology of what distributed ledger technology really is, and how the financial system and governments and banks
Yep.
and massive institutions are adopting that the distributed ledger technology as infrastructure, as
Yep.
literally kind of like the plumbing of your house, and that in my opinion has the greatest asymmetrical upside to any type of
Love it.
asset that we will ever see again. I don't think we'll ever have this opportunity again, and we are at the cusp of them passing the Clarity Act, which will again create obviously a lot of clarity. But it's really looking at these specific assets that are not speculative, and a lot of people, it is speculative. My dad's like,
Ah.
and my dad's a very wise investor, and he's like, "Well, it's all speculative." I'm like, "He's 100% correct. It is speculative." But again, it's kind of like, well, would you have bought Google stock or Amazon stock when it was speculation and the
Of
internet
course.
was
In
just,
hindsight, everybody would have, right?
yeah, right.
Right.
So I think a lot of people just don't know what to look for.
Right.
So I think you have to kind of find specific influencers or people who kind of have their toes already in the water, and then sift through and use wisdom and knowledge like any type of investment, but just see it what it is in the technology versus a lot of the things that are said about it.
All right. So, you're as a professional, what would you say to other professionals who are curious about crypto but hesitant because of what some of the things you just said? It's speculation. It's scary. It's the Wild West. Okay. So, what would you say to them that are curious that might help them pull the trigger to engage, at least to a limited degree?
So one thing that I really recommend, kind of like any type of before you invest in anything, whether that's stocks and the company itself, bonds or whatever, you obviously want to research it. So with crypto, it's obviously not been around that long. So you really want to look at these companies that have been in doing blockchain for anywhere between 5 to 10 years, and then also looking at their partnerships. Who are they partnering with? The tokenomics, which is basically the digital asset, or the token is basically just a neutral bridge asset that helps change value across that ecosystem. So one that I'll give a shout out here that I really recommend, who gives, I think these brothers give the overall best insight to explaining crypto, is Black Swan Capitalist, Versan Aljara, and his brother Vandel. Just give a zoomed out lens. They look at the history of everything. But I would look at the older blockchains, researching the companies like Ripple, which is the company that has XRP, Stellar, which is XLM, Hedera. But again, just if you research those partnerships, those are the ones that I think that are not speculative because of the partnerships and what they're about to do, and that gets you past some of maybe of those fears. But I think like anything, for any investor, everybody wants to be the one that's early, before something explodes. And I think with this, the more I feel 100% confident in the investments that I've made and knowing what they're going to do. And I'm not using them, and I'm not doing any leverage. I'm not doing any trading. I specifically am holding these assets. It's completely safe. I don't care whether the price dips, goes up a little bit, because I'm holding them long term. And
Right.
I know that long term, the returns will be, in my opinion, astronomical.
Sure. Okay. And that's one of the things you just said when you're, and this is me personally, when you're looking at doing that research, it's not just who are they partnered with, but do they own a specific component of technology that's required to to have that continued moving forward growth and support mechanism for the crypto industry as a whole. And
Hmm.
that was something that was interesting to me when I did a little bit of research. It's like, oh, it's not just a coin. It's something
Hmm.
else. It's a technology owner. Okay, now we've got some
Yep.
real value here.
Totally. And I think
Yep.
that's what it needs to be viewed as is like how people view AI.
Right.
Well, distributed ledger and blockchain is the same thing, and they're going to go hand in hand. But again, I think my opinion, there's a specific reason why the powers that be, the government, if the SEC has been just punishing crypto for the last couple of years. I personally think that they
Well, let's be
don't want
real.
you, yeah,
They
to
didn't
know about it.
understand it.
True. Oh, for
That
sure.
that was a lot of the impediment to getting even some a modicum of legislation out there to help support, defend, whatever you want to call it, the whole crypto revolution. That's, I won't say it's coming, it's here.
It's
All
here.
right, all right, all right. So let's switch gears a little bit. So, yeah, and you mentioned Nelson Nash, and he's one of my heroes as well.
Hmm.
And his whole concept, the infinite banking concept, is something that I utilize personally. I utilize in my financial planning business, and for you, you utilize it not only for you personally, but we did that transition for you to move over your 401k stuff.
Yep.
So, what problem when you were thinking back when you implemented an infinite bank for yourself? What problem were you trying to solve when you implemented it?
Um, well, I feel like multiple things, but at the time, one, I felt like having your money as a deposit in a bank. And last year, I thought there was going to be some type of a banking crisis, but that, hasn't happened yet. And, banks are, still completely have massive losses on their balance sheets. But for one, I felt, not safe. We sold one of our house, or sold our house, right before we did this. So, um, instead of putting it in the bank, I wanted to put it in my own bank. And
Right, love it.
and then two, one of the things that Nelson Nash always said is that you realize, you never know what's going to come up in life, a new car, a house, an injury, whatever.
Yep.
But I wanted to have a place where I knew that I could have access to it at any time. And then two, one thing that always stuck with me from Nelson Nash's book was saying, everything that we do in our life is financed. And then really, researching how much time looking at total interest, cumulative interest over your lifetime versus a lot of people make decisions based on if they can make the payment, if they can afford the payment,
Right.
that's a good deal. But you
Yep.
don't look at the interest level. So I saw, I was like, okay, well, if you're going to buy something, you're going to have to take out a loan out no matter what. Well, I'd much rather collect the interest, in my policy
Yep.
over time. And so that's what I've done. And now, I
And
max funded.
distribute in a tax exempt manner. That's a
Yes.
key piece, right?
Yes, exactly.
Right.
And that there were just, all the benefits of it. And I think it was maybe Dr. What is it? Either Carlos Lara or Lara. I can't remember his first two names, but he listed all those different benefits. He's like, oh, guess what it is? It's a whole life dividend insurance policy, which everyone, you mentioned that to any standard financial advisor. I remember telling my CPA I was going to do this. He was like,
Yeah, they
you're
all
crazy.
pound the drum against it because they don't understand it. And
Right.
also, because in a traditional financial planning practice, that's not something that we would normally offer because we don't make any money with it.
Sure.
I want to make you 9% so I can capture 2% and pay you 7%.
Yep.
Maybe that's the concept. And I'm not speaking ill of financial advisors. They serve a
Sure.
purpose, and most of them are great people, and they
Totally.
really do mean well. Okay.
Totally.
So you took this a step further though, and you were one of my clients that you saw the value and you wanted, when we had that initial conversation about your staff, I could tell
Mhm.
you're a different kind of employer and that your staff are not just people that come to work with you. They're your family. And I understood, I got that from you. And then we started having those conversations about retirement for your staff. And then we went down that road and we did it. We converted everybody in your business from a 401k where it's
Hmm.
got tax deferred growth, where you can lose money if it's not invested properly, and you have real strict limitations about how and when you can get to the money,
Hmm.
to infinite banks as a retirement plan for all your staff. So
Yep.
what led you to that decision?
After you helped us and set up our policies, and it just was such an amazing thing for me to feel the freedom and the control. I wanted to share it, and our
Love it.
team, we have four incredible women that work for us: office manager, an associate doctor, and then two
Sure.
chiropractic assistants. And I kind of told them, I taught them, and we've watched some of your videos. But I wanted to educate them on the difference between, just a traditional 401 or IRA or Roth, and then using the infinite bank strategy. And once they, understood how it worked, they were like, let's do it. And they also like the ability to be able to access cash when they need it versus, you just never know what's
Yep.
going to happen until you're,
You never know.
65. So,
Like
um,
you guys just went through Helene, right?
yep, we did.
And
Mhm.
having those pieces in place, if you needed it, you could get to it, and there wouldn't be a penalty. Whereas
Right,
if in your traditional 401k, if you needed it, you could get to it, but you
right,
got massive penalties for taking it too early.
right. And that
Big,
was,
big.
and I was like, well, you're going to get taxed no matter what. And the quicker that you do it, if they
Right.
did pour it out, and, and you did a non-taxable event, whatever. But
Yeah.
no brainer. And we actually, we're reading the book together, Nelson Nash's book,
Love it.
and
Love it.
yeah, so they're constantly educating themselves, and it's a good thing. It's definitely helped us bond, too, with finances and all that. So yeah, it's been a great thing.
So, from an employer standpoint, has that decision impacted retention? Obviously, you just mentioned that it's impacted culture, right?
Hmm.
Has it changed the long term thinking of your practice or your employees? How is that decision, from your perspective, manifested in a positive or negative manner?
I would definitely, truthfully, no negatives. It's only been positive. I think it's built a higher level of trust between us,
Right.
because I'm, practicing what I'm preaching, and
Sure.
then I'm sharing exactly what I'm doing. And I feel like there's a lot of times between, and obviously, I'm a chiropractor, and, I can only speak from my own experience, but I would assume, and sounds like from other people who are employees of other places, that there's a lot of times a total disconnect sometimes between a boss and a employee, and, trying to help them out or incentivize them or give them really great tools when you have those tools. So I think it's definitely been a very positive thing, and it's also a blessing for me to know that I want them to do well, and I
I love
want
it.
them
I
to be
love it.
free from the system as much as possible, and it's been great to watch them buy into it.
Hopefully, your staff realize how cool of a boss they have. So, I'm just saying.
Well,
All right, so now let's switch gears again. We're going to get a little bit farther away from the infinite banking side, and let's talk about long-term planning and family strategy. So, you've got some annuities as part of your long-term planning and diversification stuff, and it's something that we meet every year about to make updates and modifications if we need to. So, how do you, in your mind, position annuities alongside your infinite bank strategies? What is your mind or your concept about how they work together, synergistically or otherwise?
um, that's a great question. For me, it's kind of like my I guess my safety valve. I'm much more, uh I I I guess I don't feel like I'm taking risks, but according to other people, I went, big into specific well-researched digital assets. I put a third of my net worth into silver when it was $20. And at the time,
Love it.
people thought I was crazy,
You and I talked about that. I remember that conversation. Yeah, it was
Yeah.
awesome.
So, for me, a part of me is like, man, I want to cash these things out and throw them, and take them. But I know, like,
Not
being
yet.
responsible, it's like, yeah, not yet. But for me, it's, I know that they're safe. I didn't want them in an IRA because again, who knows what's going to happen with the stock market. And I
Right.
felt like there was more risk there for me. And again, with the taxes and all that. But and you doing, taking our IRAs and doing a non-taxable event, rolling them into annuity,
Love it.
getting to have the exposure that we want to have. I feel like I have a lot of control. I still feel like I'm in a traditional retirement, and I feel grounded. So
Right. You got S&P growth. You got fixed growth. You got even some really interesting ones like the dynamic intraday stuff that happens. And
mhm.
you've got no downside potential. It's
Yeah, no downside.
awesome. You shave
Yeah,
off some of the top, but you got no risk. And when you graph out your traditional S&P movement like this versus this, it's not like this. It's like this: up, flat, up, flat. When you do that, there's like in the last 20 years, I did this exercise last week. In the last 20 years, there's only 3 years where an S&P invested strategy versus an S&P indexed strategy, where the invested strategy is going to have more value than the indexed strategy. And I love that. It's like, okay, I'll
yeah,
have more money 17 out of 20 years. Sign me up. Okay. And
yeah,
there's years that I don't have more money. It's
yeah,
minuscule, right? And
yeah.
that's that kind of concept you don't really hear from traditional financial planners, because their methodology is grounded in technology and a thought process that was developed in the 1950s.
Right.
And we don't have that market environment anymore. That's Ted Brenna's. It's like the
Yeah.
401k that he uses was developed during the 70s when the interest rates were 11, 12, 15%. You don't see that now. It's
No.
easy to make money when you got 11% gains. It's hard
Totally.
to make money when you're struggling to get six, right?
For sure.
Okay.
Yeah, and I feel like the environment that we're in, which again, this is my opinion and the research I've done, but it really feels like a very different world. And you can see just a lot of what's going on, especially with what precious metals have been
Oh
doing
yeah.
recently.
Oh
You
yeah.
get I personally believe that the financial system is very sick, and I think that what normally people think as safe havens for traditional capital is becoming very unsafe. And
Yep.
so I love what we've been able to build because I feel like I have complete control, and also I'm ready, and I have cash in my cash
Yes.
value policy to do whatever I want with, to buy
Yep.
if it does come down, I'm ready to grab scoop it up. And so what we've done and decided to do, what you've helped me craft, I feel like I'm in the best possible position, for not just for me but for my family and for my kiddos, and setting them up.
It's been fun, man. And the cool thing is, we didn't talk too much about the IUL stuff, but realistically, we kind of got your kids' college paid for using those IUL pieces. And not only is it going to pay for their college, it's going to pay for their house. It's going to pay for their wedding. It's going to pay for their retirement. It's going to do all of that. It's just one little program. And you're not spending a mint on it either. And that's the beautiful thing, because you're letting the heavy lifting be done by compounding. It's beautiful.
Yeah, and I appreciate you too, because I read a lot of books about infinite banking. I did all this stuff, and but a lot of the lingo and the main concepts and like designing the policy I didn't understand. It was just so nice to be able to have you. You immediately told me, like, this is here's what you need. Here's your net worth. This is what we build. Boom, 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 boom. And that was just so refreshing when I talked to some other people and they were fine, but it was kind of like, well, what do you want to do? And I was like, well, I don't, I understand the concepts, but I don't know how to build the
Right.
infrastructure. So I appreciate what you've done for me. It's been
Well,
pretty
thank you,
life changing.
man. It's been a blast working with you. I got to be real. All right. So last couple minutes here. So let's talk about some takeaways. If you could give one piece of advice to other professionals trying to balance growth, protection, and control, right? It's three parts. Growth, protection, control. What would that advice be?
Oh, I'm just going to reiterate what I said. I don't know. XRP, Silver,
Right, right,
infinite banking.
right. All right, here's
You
an
know,
anecdote. I have another client who owns he owns a structured cabling and splicing company. And what he
oh well,
does is they go into data centers and they make all the connections from all the GPUs that run AI and all that other stuff, right? And he was telling me that just within 100 miles of where, I think it was 100, maybe 200 miles of where I live, based on a recent statement from Dominion Power that provides power to Virginia and North Carolina, that there's 120 data centers that are going to go in, which is going to significantly increase the power needs. But if you think about it, how are those connections made? What kind of metal do they use? Silver.
mhm.
Silver and
Yeah,
gold. So that's where
yeah,
this big push is coming from. This is not just here. This is on a national level. All right.
yeah,
Last question.
and global. Yeah.
Yep. Looking back, what's one financial decision that that you're most glad you made early? So what's the
Mm.
one decision that, like, if you could think, oh yeah, when I did this, like when I bought Silver 20, that's a hell of a decision to make at the right time, right? So what's the one financial decision that you're most glad you made and made it early?
Oh man,
And
I
you've
would
made a lot
say.
of good ones, man. I'm thoroughly impressed with you.
Well, I truthfully, I've been very fortunate and entered at very good times, but I will say, looking back, it's easy to be like, oh yeah. But at the time that I did, I was early and it was a risk that I know for a fact most people would not do, just because, it hadn't gone up and there wasn't anything really around it. But I would say probably one thing that I'm really proud of was my dad. He gave me advice when I took out, gosh, 165 grand as a business loan. And one thing my dad encouraged me to do, he said, listen, you need to, and I had student loans, and he said, you need to pay those off in 5 years. And I did. And I paid them off. Gosh, it was, I'm trying to think, around a little over 3 grand a month. And then, so it was probably between 5 and 6 grand a month for 5 years
Right.
getting rid of those loans. But I think I'm probably most proud of that because, I had people that were like, "Oh, like why are you paying off your student loans? Like they're going to just erase it and like why don't you space out your business loan? It doesn't matter." And my dad did instill in me, like you want to be debt free. And because of that, that led to other decisions like being able to buy silver early, to be
Right.
able to buy XRP early, to be able
Right.
to put money into a cash value. So I just have to give my dad credit and in doing that to get out of debt. So
Bravo,
probably that.
Mr. Martin. Good advice. Right? Okay.
For
All
sure,
right.
for sure.
So I got a little thing I early on. I wrote a book. It took me about 2 years to do it. It's getting ready to. By the time this airs, it'll be out, and I'm excited to have you read it and to get your opinions because I've already voluntold you that I need a review. So thank you for playing along in that game as well.
Voluntold. I'm stealing that from you.
Right on, right on. So the book talks about some of the things that we've talked about here, and it's faith based. So it's a faith based guide to these types of. And I use the word investing. Sometimes people use the word investing. It means a different thing. So sometimes people think investing in the next hottest equity is an investment. That's not. That's speculation. That's gambling. Okay, this is not what I'm talking about. I'm talking about using these
Yeah.
tools that are out there, and people should really take advantage of them. So for you, like you just said it, you took out student loans, you paid them off early. That's that IUL piece that's in the book that we did for your kids. So when they're going to go to school, they're going to take out student loans, but when they leave school, whether they get a job making 25 or 50K is irrelevant because that IUL is going to start dripping money to immediately start paying back that student loan. Student loans aren't a bad thing unless you put them into deferment. That's when they become a problem.
Sure, sure.
So, Dr. Dan Martin, thank you very much, sir. I very much appreciate you coming on to our little show here, and I'm looking forward to seeing where things go for you over the next couple of years, as well as your children and your wife.
Same here. I'm excited too. And again, I want to thank you for everything you've done, and thanks for having me on. And anybody watching or listening to this, I highly recommend listening to this man. He's a wise man and has helped me a lot and helps a lot of people. So looking forward to the book. I can't wait to read it.
Yeah, it's a well, you got an early copy, so
I know.
yeah, anytime, just open up, brother. All right,
Will do, will do.
all right. Well, thanks a lot, Dr. Martin. Have a great rest of the day. Bye, everybody.
You too.